In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, counting down to Uber filing for its IPO. The startup plans to raise about $10 billion in what may become one of the 10 biggest listings of all time. Meantime, shares of Lyft have hit a new all-time low. Plus, Snap is projected to lose users in the United States for the first time this year. And eMarketer says Instagram will pick them up. And it's being called a triumph of modern astronomy. We'll discuss how more than 200 researchers on 4 continents contributed to the first ever image of a black hole. But first, to our top story, Uber is gearing up to file for what could be the largest IPO this year. Bloomberg reporting the ride-hailing giant seeking to raise about $10 billion for its public offering, making it one of the biggest public offerings ever in the United States. But the company's road to the public markets has not been without its speed bumps. Let's take a look back at Uber's journey thus far.
10 years ago, Travis Kalanick and Garrett Camp launched Uber Cab, an elite black car service in San Francisco. Within 5 years, Uber had a shortened name and had completed 1 billion rides. 2 years later, it was 5 billion. Across 600 cities in 70 countries. And by 2014, annual sales reached $495 million, making it one of the fastest-growing startups ever. But all that growth came with many challenges. Regulators and taxi drivers fiercely protested international expansion. Reports of physical and sexual assaults raised alarm bells about rider and driver safety. And in 2017, Uber's toxic corporate culture was exposed. Reports of sexual harassment led to the firing of over 20 employees. That same year, Uber was accused of stealing trade secrets from Alphabet's self-driving car unit, Waymo. This on top of multiple investigations for deceiving authorities, price transparency violations, and bribery. Leadership under CEO Travis Kalanick reached a breaking point, and investors pushed out the once untouchable CEO. Former Expedia CEO Dara Khosrowshahi was brought in to fix it. He's hired new management, worked to rebuild trust and reputation, but it hasn't been an entirely smooth ride. In March 2018, Uber's self-driving car pilot was involved in a fatal accident in Arizona. And today, the company remains locked in litigation with drivers who want better pay and benefits. Still, Khosrowshahi continues to push the bounds of Uber's characteristically boundless ambitions. Uber Eats, its food delivery service, generated a whopping $2.1 billion, 17% of Uber's gross bookings in the third quarter of 2018. Uber bought Jump Bikes, an electric bike and scooter sharing startup, and it's promising to launch flying taxis by 2020. But as Uber spends more to fuel its global expansion, profitability remains a big concern. Entering the public markets could give Uber a rush of new capital. But will the company's lofty ambitions attract investors or cause them to hit the brakes?
Now I want to stick with Uber and bring in Gabe Klein, co-founder of CityFi and former commissioner for Chicago and Washington, D.C., their departments of transportation. CityFi is in the business of urban change management. Gabe, also an investor in Uber's rival, Lyft. So, Gabe, you're somewhat of a biased narrator here, but I want to start on Lyft. The shares now below their IPO price, closing at $60 today. Do you think the pessimism now that we're seeing, days after the IPO about Lyft's growth is warranted?
No, I don't. I mean, this is the same company that was around 10 days ago and 6 years ago, and they've got an excellent track record. We're seeing triple-digit year-over-year growth. We're continuing to see a focus on urban consumer transportation. We're seeing an expansion into mobility with scooters and the purchase of Motivate Bike Share. So now I'm very bullish, and I think you really can't watch sort of day to day what's happening in the market.
What about Uber, targeting a $120 billion valuation, certainly much bigger than Lyft. It's in many more markets. The business is bigger, but they're also losing a lot of money, just like Lyft. Is it fair?
Well, last year it was a $76 billion valuation. Then it was $120 billion. Now we're looking at 100. I don't see, what's changed materially from last year to this year, except for the shuttering of ATG, their autonomous unit, which I guess has been sort of brought back, but it was, really hemorrhaging cash. And then, of course, the purchase of Jump, which is, I would say, a bright spot for them. But I honestly don't quite understand the change in the valuation, except for perhaps looking at Uber Eats and the success of that business. But I think you have to take into account, Postmates and the host of other businesses that are in that space versus the duopoly of Uber and Lyft.
Right, but is Uber Eats a $40-50 billion business? I mean, that's the kind of valuation jump we're talking about here.
I don't think so. I think that's a commodity business. I think when you look at ride hail, it's very complex in terms of the technology to create the marketplace to balance supply and demand. And so I think we do have a duopoly because it's so complex. It takes years to build that two-sided marketplace. But no, I don't see that with Uber Eats.
So here's another question. Lyft has been pushing, we are creating a greener future. We are decreasing congestion on the roads. But there was a study done by the University of Chicago that found that Lyft and Uber could be responsible for, in fact, putting more cars on the roads in the biggest urban centers and actually undermining public transportation. Do you see any evidence of that?
I do, and I see, particularly in places like Manhattan, you have a tremendous number of vehicles, up to 80,000 vehicles, and if they're roving or deadheading, as we say in the transportation space, that can be a real negative externality for cities. So I think the focus on getting multiple people in vehicles is very important, and you see even like in Boston, I think it was announced today for Logan Airport, there's a push to charge more for individual trips and discount the taxation at the airport for multiple person trips. And I think you'll see that as we move to congestion pricing in cities as well, that there will be a real push towards active transportation and non-single occupancy vehicle trips.
But do consumers really want that? I mean, they have shared rides now, and it's unclear how big that is a portion of their business, but it certainly doesn't seem like it's the biggest portion of their business.
I don't think it is, and I think that's going to change. And I think that's where government regulation helps. I think pricing is hugely important. And so if you charge, a modestly smaller amount for a multi-person trip, people are not going to do it. And that was one of my complaints when Uber and Lyft first launched Uber Pool and Lyft Line. Now you can see it getting significantly cheaper. And I think with the changes in taxation on top of that at airports or in downtowns throughout the world, I think it's going to be much more tempting to share a ride.
So what do you think is the biggest threat to their business, given that getting from point A to point B, however you do it, is a commodity?
Yes, I mean, you're absolutely right. I think that is an issue. And so some people say, well, the problem for Uber and Lyft now is that autonomous vehicles are further out. And so that's, a real problem for their business model because they need to get rid of the driver. I actually think it's quite the opposite. I think that what you're going to see is you're going to see both Uber and Lyft raise prices. They're going to have to approach profitability. And I think that the real existential threat for them, ironically, was autonomous vehicles because neither of them are the leaders in those industries. And the reality is once Waymo, Cruise, and GM turned on that type of service, you're talking about a true commodity without the complexity of the marketplace. So I actually think they're in a better position with robotaxis being, let's say, 5 to 8 years out.
Interesting. All right. Well, then again, you have investors betting on these companies because of self-driving cars, thinking that'll bring costs down.
I am not one of those people. I believe that you need to invest in them and think about whether you think people will continue to see these apps as sticky when they raise their prices by 20 to 30%.
Gabe Klein, co-founder of CityFi. Always good to have you here on the show. Thanks so much for stopping by.
Thanks, Emily.
Well, Apple got a rare negative recommendation as HSBC lowered its rating on the stock to reduce from hold. The firm said it could take some time for its recently announced digital services to generate returns, and it did commend the company for putting its money where its mouth is and raised its price target to $180 from $160. Coming up, it is no secret that foreign companies want easier access to the Chinese market. Well, the Chinese government may be opening a door into cloud computing. We'll discuss next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. It is winner take all for the last two companies chasing a $10 billion U.S. Department of Defense cloud deal. Amazon and Microsoft are the last competitors standing. This after the Pentagon determined that the acquisition process for the contract wasn't tainted by alleged conflicts of interest. The announcement of the winning bid is set for the middle of July. And speaking of the cloud in China, it's a tricky road for foreign cloud operators. They are forced to license their technology to local partners, store data on Chinese soil. But U.S. and Chinese negotiators are discussing a compromise that could possibly do away with one of those requirements and give American companies access to this $12 billion market. This news coming as Treasury Secretary Steven Mnuchin told CNBC that both sides have essentially agreed on how to enforce a potential trade deal. To discuss in Washington, I want to bring in our Bloomberg senior trade reporter, Sean Donnan. So, Sean, first of all, let's talk about what Steve Mnuchin said today. He's told CNBC that the talks have been productive, but that there are still issues. What are the issues?
Well, I think the issues are the same as those that we've been hearing about for some time, and that is how and when does the U.S. remove tariffs in exchange for Chinese concessions on structural reforms, big purchases of soybeans, natural gas, and so on, aimed at closing the trade deficit, and secondly, the enforcement piece. Mnuchin today said that the enforcement piece was largely done, but we got to be a little bit careful here. Steven Mnuchin has been out there beforehand saying that certain elements of the deal were completed, and it's proved to be not quite there yet. And we've already heard some skepticism from Capitol Hill on exactly that, from Chuck Grassley, the head of the Senate Finance Committee today, making exactly that point, that he wanted to hear this from Bob Lighthizer, the U.S. Trade Representative, not Steve Mnuchin.
Now, on that point of enforcement, he said the U.S. and China would open an enforcement office. Is that something we expected?
We've been trying to figure out, and Bob Lighthizer has been cryptically referring to some structures for an enforcement mechanism. This is, of course, the key element of any trade deal for the Trump administration. They want to make sure that China has to live up to its commitments or else face some consequences for the tariffs and so on. And there's been some different mechanisms that have been talked about in terms of how that would work. The Chinese worry is really that they'd be giving up sovereignty. They don't want the U.S. to be judge, jury, and executioner here. They want some kind of say in it. So this office structure sounds a lot like embassies to me, is one thing that's being talked about. They've also been talked about joint panels. Bob Lighthizer has talked about a series of different kind of meeting schedules where every month officials meet, every quarter sort of more senior officials meet, and twice a year ministers meet to review progress. But we're still waiting for all of these details. And sometimes what we hear from the administration raises more questions, like today, than it actually answers.
Meantime, Chinese officials this week called a meeting with executives from Microsoft, Amazon, Apple to talk about potentially opening up the Chinese cloud market to American companies. How significant is this?
This is hugely significant, and it really gets at the crux of not just the Trump administration's complaints, but previous administrations' complaints about China, that it has closed off China and this huge, potentially lucrative market in the digital sphere there to outside competition, and that has created these kind of behemoths like Alibaba that haven't faced competition from the U.S.'s own behemoths like Amazon, and for that really important e-commerce market. The cloud business is really the kind of the plumbing for the 21st century economy, if you will. And if U.S. companies like Amazon, their Amazon Web Services is their cloud unit, Microsoft, IBM can get in there and compete for that market, that would be huge. That's a huge opportunity for U.S. companies. Some big questions, again, about the details here. We're going to have to wait until we actually see these licenses get issued, if they ever get issued, to understand the significance of anything that's negotiated. It's pretty clear, and I don't think any of the companies expect this, that the Chinese are keen to keep this thing in place that's called the Great Firewall of China. That is, of course, the firewall that isolates the Chinese internet from the rest of the world's, that the Chinese are keen to keep that in place and keep some data localization requirements. So there's a lot there still to hear, but the fact that the Chinese are calling in the companies here to talk about this is a sign that they're thinking seriously about that, and that is important because it points to this deal, this negotiation, being much more about substance than sometimes we've been led to believe.
Right, and of course, it's interesting how it fits into the broader context of the trade talks that are happening in general. Bloomberg's Sean Donnan, who covers trade for us, thanks so much for that update. Coming up, Disney is prepping for its big push into video streaming, pouring roughly $2 billion a year into its new service. But will it pay off? And Bloomberg Tech is live streaming on Twitter. You can check us out at Technology. Follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. Well, after years of rumors, Disney is expected to finally reveal the details of its new video streaming service, Disney Plus, to investors Thursday. But it is not the entertainment giant's first attempt at a video subscription service. Shareholders looking for assurance about Disney Plus need to look no further than the Disney Channel, which the company first introduced as a premium cable network similar to HBO. Joining us from LA, Bloomberg's Chris Palmieri. So, Chris, the Disney Channel worked out well for them, correct?
Yeah, it did for decades, but it was very similar in a way. I mean, it was originally, you had to subscribe to the Disney Channel. It was like HBO. Disney was selling movies to Showtime and other pay TV services, so it had to give up some of that revenue when it sold, put stuff on its own service. And it took a while to catch on, and the lesson really was it offered a broad array of content, not just for the youngest kids, but it created content for older kids and teenagers, and that's when things really took off with those original shows. And I think Disney's learning from that lesson, and you're going to see a wide variety of programming right from the start with this new streaming service, and big spending.
Now, I know you and your team have been working really hard to try to get any details on this event tomorrow, any details on what Disney is going to unveil. What are you expecting Disney to show us tomorrow?
Well, it's amazing that they just closed the biggest acquisition of their history, $70 billion merger with Fox, but what everybody wants to focus on is this service that hasn't even launched. But people are going to want to know, when is Disney Plus launching? How much is it going to cost per month? They'll want to know if there's any targets for how many subscribers Disney is anticipating, although given their history, I doubt that they'll stick their neck out and offer that. They'll want a sense of how much the company is spending and how long those losses are going to continue. I've seen estimates that this won't even break even until 2024. So there'll be a lot of questions from analysts about the cost of all this.
All right, Bloomberg's Chris Palmieri, thank you so much for stopping by. We'll keep waiting for your new reporting on what's coming tomorrow. Well, EVgo CEO Kathy Zoe says 7 million electric cars will be on the roads by 2025, adding that electrified transportation has reached an inflection point. She spoke with Bloomberg's Alex Steele at the Columbia Global Energy Summit in New York.
We try to do the old Wayne Gretzky thing, which is don't skate to where the puck is, but skate to where the puck is going to be. So what we do with charging is we try to skate right ahead of the puck. So we work really closely with the car companies and say, how many are you going to be deploying in the United States? Where are you going to be deploying them? And then we go and make sure that we build there so that the people will buy them and feel comfortable that the charging infrastructure is there.
How do you deal with that in a business model kind of way?
Well, we work, as I say, we work really closely with the car makers, and so sometimes, like Nissan is a partner of ours where they tell us where they're going to sell cars, and we have an incentive program for their drivers so that when they buy an EV, they get a bucket of kilowatt hours for free charging, and it's an incentive for the dealers to get those cars into the market.
So it begs the question too, sort of who's going to be responsible for driving that? Is it the car companies? Is it going to be the current oil companies like a BP that already have like normal fuel stations? Like, do they wind up going to fast charging? Is it utilities, for example? What's the driver?
Well, look, the driver overall, I think, is it's a good technology. We're talking about innovation. I have never met a person that has driven an electric car that doesn't just love it. So it's the pace of innovation. So that's sort of number one. Number two, we've got environmental imperatives, and again, that are been around for a while, reducing all kinds of air pollution and including carbon pollution. So that's a big driver. I think the car companies see the nexus of those two things, and they are pushing forward. I mean, the car companies have announced $300 billion that they're putting toward electrification of their platforms, and that's significant. That's a significant amount of money. So, and then what you see is the oil companies, I think that progressive oil companies are saying, my goodness, we need to diversify and not just be the supplier of internal combustion engines, but companies like Total and Shell and BP are diversifying and investing in electrification infrastructure.
So,
all right, Kathy Zoe there of EVgo with our own Alex Steele. Coming up, eMarketer says, snap out of it. The research firm predicts that Snapchat could lose users in the United States for the first time. Snap says that model is flawed. We'll discuss next. And later in the show, remember SpaceX's first Falcon Heavy launch, the one that sent a Tesla into space? Well, another one, its massive rockets, is ready to launch. We will discuss the payload next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. In the last week, we've talked a lot about Snap, its push into gaming, the stock resurging, and even analysts upgrading the company. But one industry analyst, eMarketer, says Snapchat's efforts to broaden its audience with new features won't revive growth, at least in the short term. In fact, eMarketer is saying Snapchat will lose users in the U.S. for the first time this year, bringing Snapchat's monthly users to 77.5 million in the U.S. in 2019. Joining us to discuss, Jay Jacobs, analyst at Global X, which has an ETF focusing on social media companies and holds Snap stock. Also with us, Bloomberg Tech's Selena Wang, who covers the company. So how did eMarketer, Selena, come to this conclusion?
So eMarketer has a methodology that's a little bit different from Snapchat's, and their comparisons are different as well. So eMarketer is looking at monthly active users, and Snapchat typically reports its daily active user base. Now, what eMarketer is saying is that based on their projections, user growth in the U.S. will slow for the first time this year. They're also predicting that user growth is going to flatline over the next several years up until 2023. Now, Snapchat disputes this and points to their own data, which shows that daily active users are not supposed to decline in the first quarter of 2019, but they do not give projections as far out as eMarketer does. But regardless, it shows that some of these more recent changes, as you mentioned before, in terms of gaming, revamping the app, finally having this Android redesign may not expand the overall audience pie in the near future, at least.
Jay, what's your reaction to this prediction from eMarketer?
Well, the biggest thing is the delta between their previous prediction and where they are now. They were expecting 6% growth this year. Now they're going to about -3%, which is a huge swing. We've been looking at the full social media space, and it's just really hard to see how any U.S. social media company is really going to experience user growth at this time. They're pretty much fully penetrated. It's really more about how you monetize those users than trying to tap into a huge market that they haven't already reached.
So you don't necessarily believe that the users could swing that much, but you also don't think users are going to grow?
I think it's going to be really hard to see user growth. If you look at Facebook and Twitter, they've really flatlined with user growth for the last couple of years and even seen a bit of a pullback because they've been kind of cleaning out their system of fake accounts. I think if you look at Snap, they've really fully penetrated the Gen Z generation, which is their wheelhouse, and they're really struggling to capture millennials, Gen Xers, and of course baby boomers. So I really don't see a ton of user growth, but I do see a lot of growth in how they monetize those users. They're still pretty low in the rankings of how much revenue they're getting per year per user. So there's a lot of growth on the revenue side.
Now, Snap did release this statement in response to eMarketer's report, saying the methodology of eMarketer's recent forecast is flawed. The report does not factor in key recent developments at Snap, such as our revamped Android app, our reference our statement in February that we do not anticipate a sequential decline in our daily active user total in the first quarter of 2019. Who do we believe? Selena?
I think broadly speaking, though, the trends do align. You're seeing Snapchat's own data show that user growth is barely growing, or there was great excitement last quarter because they didn't decline.
And eMarketer's furthermore saying that Instagram is going to pick up Snap's lost users.
And we've seen that well documented. I mean, Instagram has directly copied Snapchat's most popular feature, Stories, and we saw right after they announced that there was a pretty big drop in usage for Snapchat. And I think when I'm speaking to analysts, there seems to be a little bit of too much excitement too soon when it comes to Snapchat. I mean, the stock has nearly doubled this year, and a lot of the things they're talking about have yet to show proof that they've been successful. For instance, these in-game app features, those have barely been rolled out. The Android redesign, the Android revamp is just starting to roll out now. It won't be finished globally until later this year. So really, Snapchat isn't out of the woods yet, and we're seeing that they're really just focusing on drilling down on this core Gen Z demographic, trying to get those users to be monetized better, but they really sort of seems to have given up on this older demographic.
So, Jay, does your pessimism about growth in social networking users in general, does that extend to Instagram?
I think it does. You really have to look at every U.S.-based social media and say this is a fully penetrated market. Now, it's a very different market if you look at Asia, where there's just not as much penetration among most of the users there. But in the U.S., you have full internet penetration, full smartphone penetration. Growth is going to be kind of at the speed of population growth at this point. But again, we remain really bullish on those areas like Snapchat getting into gaming, using an ad network across other apps, plugging into other apps. They're doing some really interesting things about how to really monetize those users that they do have. I just don't see them being able to move kind of up the chain into millennials and Gen Xers anytime soon.
Now, interestingly, over the last week, we've seen a number of different analysts upgrade their views on Snap, including Mark Mahaney of RBC Capital, who was just on the show 2 days ago. He said that he believes Snap is at an inflection point, and he was very optimistic about their Android app. Take a listen.
Now, if they truly have fixed their Android problem, you're going to open up a much broader range of users. Start seeing DAU growth return. You'll see revenue growth accelerate. You'll see gross margins accelerate. Losses will come down. Stock will go higher.
So, Selena, we're focused here on the U.S. because that's what eMarketer is focused on. But, many international users are Android users. What does Snap's picture look like in the international market? And from your perspective, have they really fixed their Android problem?
Well, we have yet to see. They've only recently announced that it's going to be, this new revamped version is going to be rolled out. And if they do really get it correctly, they do have a huge global market opportunity. Some regions and some places it may be a little bit too late. They have already lost those users to other competing platforms, but there are new developed markets that they can still penetrate. But in terms of all of this analyst sentiment, I think it's fair to say that 2018 was rock bottom for Snapchat. Everything that could have gone wrong did go wrong. And now analysts are starting to track some of this maturity, this growing desire to actually make money, to actually be a profitable, growing company, to hire top executives from other firms and to have a little bit less executive turnover. And those are all the positive signs that they're hanging on to.
Jay, do you think that Snap will remain relevant in the conversation? I mean, you hear about these users who have fallen off. You know, Twitter's growth has also plateaued, but you know, President Trump tweets on Twitter almost every day, and it's a huge part of the news cycle, and it keeps Twitter feeling relevant. Do you think the same thing is happening with Snap, but with a younger demographic?
I mean, it's a really good Trump point about Twitter, because I think the Trump effect on Twitter is it brought Twitter into a lot of people's lives who weren't already using the platform. It's kind of a have-to-have platform at this point. Snapchat hasn't had that moment outside of the Gen Z generation. So, you know, if there is a bull case for more users being added, that's going to be it. There's going to be something that happens, and it only happens on Snap, and you have to be on Snap to be able to see it. But that's really hard to predict, right? I mean, it's a great upside case if it happens, but we don't know if and when that'll happen.
All right, Jay Jacobs, Global X analyst, and our very own Selena Wang. Thank you both. Meantime, Amazon will start accepting cash at its Amazon Go convenience stores, which don't have cashiers. There's been criticism that going cashless discriminates against lower-income shoppers without credit or debit cards. Amazon has only 10 Go stores in 3 cities in the United States, but there could eventually be as many as 3,000. Coming up, no longer just the something to be imagined in a galaxy far, far away. We will tell you just how scientists captured the first image of a force so strong that nothing can escape it. We're talking about black holes next. This is Bloomberg. SpaceX is readying yet another launch of its Falcon Heavy rocket on Wednesday. But unlike its initial launch that carried a Tesla car into space, this one will be for the first paying customer of the heavy lift rocket. Just who is it? Saudi Arabia's Arabsat, a satellite services provider. To tell us more about what this means for SpaceX's business, I want to get to Dallas, where Bloomberg senior aviation reporter Justin Bachman is standing by. So this is a pretty big milestone, Justin.
It really is for SpaceX. This is the first time where they're flying the Falcon Heavy with a paying customer, and it's not just sort of for the testing and the PR purposes. This is actually bringing in money. And it's also an important addition to their product lineup, because SpaceX can now say we have something for customers who have a really large payload like this satellite. And even more importantly, down the road, it opens them up for even more government business.
So what happens next? You know, if they can pull this off, how many more customers could we see?
Well, I mean, it's sort of a limited universe of players with satellites this large. I mean, that's not a very large and growing business. It's a steady business, and it's very profitable. But at the same time, you would really be counting on the Department of Defense, which does a lot of classified spy satellites and other military technology. And I think, you know, one of the interesting things about the Space Force that the president is trying to get integrated and get that through Congress is that you could see a lot more launches in theory if that takes off, because that would potentially mean a lot more hardware that goes into space and potentially more business for SpaceX.
Now, SpaceX is also working toward launching its first human into space. What is the timeline on that?
That's going to be later this year. I mean, there are still some fairly significant reviews that need to happen before NASA puts their astronauts on that. And that would be with the Commercial Crew Program. The Falcon Heavy that's launching today actually is not rated for humans. So, you know, we're not going to see any NASA work on that. And, you know, Elon Musk has said that if in the future the even larger Starship project is not, you know, meeting the deadlines that he set, you could potentially see them get Falcon Heavy rated for human passengers, but that's still, you know, something that's pretty far off.
Well, we know that Elon Musk likes to make ambitious deadlines for himself. So what are the other milestones that you're going to be watching for over this year and next year?
Yeah, the big one for SpaceX is when they fly people. I mean, that is sort of the top of everything for the company right now because, this is a critically important contract with NASA, with the U.S. government. And it also, is the first chance for, Elon and SpaceX to show the world we can fly people because he started the company because he wants to go to Mars. And the whole point of all the work they do now is for deep space exploration in the future. And I think that that's kind of what everybody at SpaceX is working toward now, to fly people safely and show that that's just, the next thing on the list that they're going to cross off.
All right, Bloomberg's Justin Bachman for us in Dallas. Justin, thank you so much for stopping by. Now, speaking of deep space, it's being called a breakthrough for humanity and something that pushes the boundary of science. I'm talking about the first ever glimpse of a black hole in space. You are looking at a black hole at the center of Messier 87. That's a massive galaxy in the nearby Virgo galaxy cluster, some 55 million light years away from us here on Earth. Up until this point, a black hole was something we only saw in simulations or Christopher Nolan's sci-fi movies. It took 8 telescopes scattered around the world from Hawaii to Antarctica and beyond to make this possible. To tell us more about this exciting new frontier, we've got Caltech professor and experimental physicist Rana Adhikari, who joins us now on the phone. So, Rama, I'm so excited you're here because I've been getting so many questions from my children about this black hole. First, tell us why, in particular, this discovery, this image is so exciting.
I think children have the best questions. So the reason that they're excited is the same reason I'm excited. They look at it, and it's just a thing that you would never see on Earth. And the kind of laws of physics that are going on and making that kind of image are the kinds that you only hear about in Harry Potter novels or comic books.
So here are some questions then from my 6-year-old son. The first was, where did it come from? Where do black holes come from?
Yeah, see, this is what I'm saying. These are the best questions. This is exactly what we talk about at an astronomy conference. Where do black holes come from? And everyone has their own opinions. And this is one of the observations that we think will help us figure this out. But the only way to get a big black hole is to put together a bunch of little things. And this thing is billions of times heavier than the Earth, or billions of times heavier than the Sun, which is thousands of times heavier than the Earth. So it's a lot of things that have smashed together. And one of the things we really don't know is, do black holes make galaxies, or do galaxies make black holes? Because they all seem to go together.
So what are the opinions?
For the heaviest ones, one of the opinions is that when these things are flying around in the center of the galaxy, it's really crowded, and their gravitational pull drags on each other and eventually slows things down, and they all fall down and land on the black hole. And part of the reason you see all this glowing orange material around the picture of the supermassive black hole is it's the friction of these gases rubbing together as they fly at the speed of light, and just rubbing together, just like rubbing your hands makes them hot. If you rub a bunch of gas together at the speed of light, it generates X-rays and gamma rays and all kinds of bright radiation, and that's why we can see it from so far.
So here's another question from my son. He said, why was it so hard to take a picture? Why can't they just send a drone in there?
Yeah, we will send a drone in there someday, I hope. This is a picture taken using radio waves, which is really unusual, and it's not something normally we're used to, but it's something like when you see in the movies, people use sonar or radar to figure out what's going on in the ocean or on the ground. So it's a different kind of radiation from light, but it's just as good. And in this case, we use this, or the people who observed it use this because they're able to put radio telescopes on different sides of the Earth. So it's a little bit like how something would look like if your eyeball was the size of the Earth. And why is it so hard? A black hole is about as small of a thing as you can make, as far as we know from Einsteinian physics. So if you took 5 billion suns and smashed them together until they completely collapsed, this is about the smallest thing you could make from that much mass. And it's so far away. It's millions and millions of light years away. So, we think it's something small, like when you see an airplane in the sky, that's small, or when you see the moon, that's small. But this thing is millions and millions of times further away than the moon, or billions of times further away than the moon. And the moon that we look at, it's it's something like a half a degree across in terms of angle, but it's hundreds of times farther away from the Earth than it takes to get from LA to New York. If you did that trip 100 times, that's about how far away the moon is. But you'd have to do that trip hundreds of billions of times to get as far away as this black hole is. It's so tiny seen from where we are. And this is why...
So yeah, that's basically what I told him, for sure.
When I first heard about this... Oh, sorry,
My last question, Rana, is, what is next? What do you learn from this, and what is the next big discovery that scientists are working towards when it comes to black holes?
Yeah, I was already wondering about this last night when I was was guessing what the image would look like. And I was thinking, how will we do better and what's next? It's one of these things. Stephen Hawking brought up this problem. This is really why he's famous. In 1974, he said, we really don't know what the border of a black hole is going to look like. And there's a lot of Hawking type of predictions about radiation from the border of the black hole. But what happens even when we think about black holes on a chalkboard, the laws of physics don't make sense. There's a big clash between quantum physics, which tells us about particles and uncertainty, and Einstein physics, which tells us about gravity and space. We don't know how to put those two things together. And we think finally when we do it, we'll find out that there's something really new and exciting going on right at the border of a black hole. So the next efforts will be adding more telescopes to make this image better, experiments like LIGO in the US, which will look for gravitational waves, just starting from a few days ago. And then hopefully in several years we'll have another space antenna to look for another kind of gravitational signal, but from supermassive black holes.
So fascinating. Well, you have piqued the curiosity of children and adults everywhere.
Awesome.
Caltech's Rana Adhikari, thank you so much for joining us. Still ahead, Google is looking for a new moneymaker. We'll talk about where the company expects to find a fresh source of cash in one of its most popular, but so far free, features. This is Bloomberg.
Oh, they're going to be so...
For more than 14 years, Google Maps has been relatively free of charge and ads. Now it could be the tech giant's next big moneymaker. Google has slowly been experimenting with ads in the popular web service, highlighting sponsored locations. And as Google's search ad business slows, consumers may start to see more ads on maps. Joining us from New York to discuss, Bloomberg's Garrett DeVink. So Garrett, how exactly would this work?
So I'm sure a lot of people have already started to see a few ads here and there in ads. I mean, there's obvious ones such as if you search for, coffee shops nearby me and a list comes up kind of alongside the map, one could pay to be at the top of that list. Maybe Starbucks wants to pay Google so that they're at the top of that list instead of other coffee shops. The other way is, of course, for the actual pin that shows that coffee shop to be a different color, maybe a brighter color. In this case, purple and green pins are going to be ads in those sort of map searches. And, there's a whole host of other ways that you can imagine them doing this if they want to pull more money out of maps.
Are consumers going to accept this after it for so long being ad-free?
It's interesting because, I kind of came to the story because as a consumer I had started seeing ads in my maps, and I love using maps. I use it all the time. It's probably my most used app. And I'd always kind of felt that it was just sort of this great, piece of infrastructure out there, this utility that I could use to kind of get around. But of course, Google has spent billions of dollars building maps, mapping the entire world to a level of detail that is pretty incredible if you think about it. And it's definitely transitioned from being something that maybe we were just using for driving directions to something that we really use to sort of find our way through a city. When I go traveling, I save a lot of pins about restaurants and things I want to see, and I don't even have to ask anyone questions when I get there. And so at this point in this company's life, they're at the point where we're all going to use this regardless of whether there's a few ads or not. And so because they're under pressure to grow revenue, they're really going to start turning on the screws here.
How much money do you think Google can make from this?
That's a great question. I mean, Google is already making billions and billions of dollars, every quarter on search ads, right? Every time someone searches for something using Google ads are showing up all over that. And when you think about, mobile search, for example, a lot of the first screen, it's hard to even see normal search results without, ads crowding that out. So there is a lot of room to grow here. And, as you said earlier, they've been going really slowly on this. They don't want to spook people off. They don't want to, push back against consumers and what they like. But there is a lot of room to grow here.
So when do you think we will see ads in greater volume? I
think they're going to continue to kind of go slowly. It's not like this company is under tremendous pressure from investors to quickly, ramp up money on maps, but definitely expect, this to continue. And I think it's something that 5 years from now we'll look back and Google Maps will look pretty different.
Interesting. All right, Bloomberg's Garrett Tevink, thank you so much for bringing us that story. And that does it for this edition of Bloomberg Technology. We are live streaming on Twitter. You can check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.